The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as Thursday's market trade wrapped up and was all said and done, fairly mixed activity. We saw some of that early strength fade in the soy complex, while we saw mixed activity end up in corn, wheat under some pressure, cattle coming well off the highs as well on the day. Let's talk about it. Let's bring in our good friend, Bryan Doherty, Senior Market Advisor at Total Farm Marketing, joining us here today. Bryan, good to catch up with you, sir. Hope you're having a good week here. And, yeah, interesting market trade action. We definitely didn't end up where we started the day, but overall just kind of a quiet mixed action across the grains and livestock trade.
Yeah, it was quite explosive, especially in the livestock, and to see some of the contracts go negative, that was a little bit disappointing, maybe discerning. You'd like to see that strength if it's there to stay at it, but at some point somebody's going to hedge these skyrocketing prices. But over in the grains, yeah, a little disappointing. We had some good strength in May corn throughout the morning hours and trading over 660 a bushel, and yet ending the day at 652 and a quarter, down 3 3/4, leading the drop in corn. December corn lost a penny and 3/4, 553 3/4. Had some strength early on, didn't hold it. Beans, double-digit gains early on, didn't hold it. May beans down 3 1/4, and then a nickel higher or so in that November. So okay, but a little bit disappointing. Probably the big loser again is this wheat market. It just cannot find any traction. It's getting close to the price of corn futures. Can't export it. We thought there was more feed usage, and quarterly stocks went up. It seems for a crop that struggled last year, we just keep finding inventory both domestically and worldwide. And when you got a poorly rated winter wheat crop, any hint of rain sends the market quickly lower. So the bears are definitely in charge of this marketplace.
I was surprised with wheat as well. You mentioned, the Bears in charge and the rain in that forecast, but I know we got that news about Russia here out this afternoon talking about they don't want to extend the grain deal unless the West gives some concessions for grain, fertilizer exports, etc. And so it seems like we're on another collision course with this Ukraine grain initiative, but that didn't really give us any reason to have a move back to the upside this wheat market. It seemed like it just wasn't the case here, Bryan.
It seemed like it wasn't the case, and it wasn't the case. It almost doesn't matter what the news is right now. It seems like it's going to be kind of construed as bearish for wheat, and I think that's a reflection of what we've been talking about for a long period of time, is that the money flow in the wheat market is on the defensive. The funds have house money to work with. The market moves up a little bit. They sell it hard, and they sell it frequently, and it just keeps pressuring prices. And when you're making money doing something, you'll continue to do it until it's proven otherwise, and they are continuing to sell. There's just not this urgency. We talk about this grain corridor, but as long as it's open, as long as wheat's flowing, it looks like the world has an ample supply of wheat, with Russia's massive crop last year still feeding the world at this point.
The dollar getting down near 10-week lows. I wonder, will that be any sort of bright spot to maybe help out our commodities as a whole, Bryan? What's your thoughts there?
Boy, you'd sure think so. That dollar just kind of keeps ratcheting downward here, and again, it's just not helping any of the row crops, or maybe it is in the sense that December corn's holding 550, and beans in November around $13. But that's not a lot of consolation when both of these markets were substantially higher at the same time the dollar was higher. So I'm not sure there's a lot of correlation there right now. But suffice it to say, when the dollar drops off like this, we do have a tendency to see the inverse relationship between demand and exports pick up relative to the dollar. And there again, as you indicated, down quite hard today and approaching the low that we saw back in February, which was the lowest price for the dollar that we saw since last spring, a year ago. So you're approaching a year low in the dollar. That should be worth something maybe more than, wheat down 10, 11 cents.
I want to talk a little more in the corn and soy markets here, Brian, what you're seeing chart wise. And I know, too, hearing a lot of talk about that May July spread in these both these complexes, some of the interior basis levels, some areas, it sounds like end users trying to pry old crop supplies out of farmers' hands. What's your take on that and what you're seeing on these charts right now in corn and beans, Brian?
Yeah, pretty good inversion, which again means the heavy lifting is done in the cash market. We're seeing the cash bids pull grain from producers. We're also seeing, though, where some elevators and farmers aren't happy about it, but they're moving their bids over to July, and we're not the first notice day yet. So it is what it is. But it's a tale of two perspectives right now. Old crop, tight inventory. The further west you go in the Midwest, the tougher it is to come by ample supplies of anything. And the interesting part of that is talking to farmers in the Western Corn Belt that had some snow lately and some rain. Now they've gotten summer-like temperatures and some wind. They're also saying that, hey, look, we're grateful for what we got, but it's gone. So it could be really interesting here. But on April 13th, it's just a challenge to get too wrapped up into too dry at this point. The first process in getting a crop on its way is getting field work done and getting into the planting season, and that'll help to accelerate that. The other comment I guess I would say at this point is we're not talking much and not hearing much about Brazil, and that's because there's not much to talk about. So as long as you don't hear much news, that crop's in good shape, and that's the way it looks right now.
Well, I know as well, soybeans, it seemed like some of the initial strength Thursday morning was that Rosario grain exchange news, cutting the Argentina crop down to 23 million metric tons. I mean, if that number were to come to fruition, Brian, that is a very very rough number for that Argentine soy crop.
Yeah, corn and soybeans dropping in
Mhm.
Argentina. Those are very significant numbers. And those are the kind of numbers that give pause to a marketplace when you look at, just the sheer, what does that mean, a metric ton? What does it really look like? It's significant. The corn dropped 35 to 32 million, 3 million metric tons. Okay, so metric ton, 39.4. So in 3 million, you're looking well over 100 million bushels. That's impactful. Unfortunately, the market didn't view it as much today or such today. And that just goes to the sort of the lethargic feel of the marketplace right now. You just having a tough time sustaining rallies. You think about it. We got the Rosario exchange today. You got a dollar that's favorable, and yet we still ended up in red ink.
Very, very true. Well, Brian, it's getting to be that time of year. We're getting all this planting activity starting up in many parts of the Corn Belt, not everywhere, but many. What would your thoughts be for farmers to think about with this environment that they're in? They're getting busy and getting wrapped up with planting or getting, wrapped up in spring planting season. Don't want to forget about their marketing, though. So, any thoughts for risk management here as they're working through a very busy time of year?
Great questions. I think it depends where a farmer is with sales on both old and new crop. If you're, let's say, 80+% sold on the old crop and you're 30 to 50% sold on new crop, I'm not too anxious or worried about anything. But if you're the opposite and you've got 50, 80% of old crop on hand and very few, if no sales on new crop, then I think you need to be more concerned and more proactive. We're in downtrending markets. So wheat has been in a downtrending market for almost a year. Corn is in a downtrending market. Soybeans are in a choppy market, but the net is down. You're in downtrending markets. You've got a weakening dollar that's not really being helpful or beneficial. So as we move forward, to me, the recognition is that this was a one-off year last year. And for the moment, until weather dictates otherwise, it looks to me like the markets are going to have a tough time when they do rally to sustain it. That is, generate new buying interest when prices are higher. And look at your charts or have someone look at charts with you, and you'll see there's quite a few overhead resistance points that we sort of keep testing and then falling off of.
We are having a conversation here today with Bryan Doherty of Total Farm Marketing. Bryan, you mentioned the cattle market earlier on. I'm just wondering, did I miss a news headline? Did something happen on the charts? Did we take some profit? What happened to that cattle trade on Thursday?
I think we took some profits. We're still $1.22 higher in April, but the deferred months have had a pretty good run, and it's hard to sustain something out further and further and further in time unless there's some news to support it. And so it's kind of like who blinks first. And when somebody starts to blink, then all of a sudden you get a lot of blinkers. And I think that's what happened. And I hate to keep pointing at it, but you're not getting any help from that hog market or dairy market for that matter. So beef has been cattle have been on their own island here for a while, and the technical indicators. So if you're someone who's following charts, you're looking at stochastics that are approaching, record high levels in their range of where the index can go to, and maybe some crossover points today. And you're just getting some technical things that say, let's call it overbought. It's hard to sustain an upward momentum when you're up a lot, and that's where we are. Suffice it to say, though, good cattle supply, not good cattle. I meant to say good demand, good price on lack of cattle supply. That's been confirmed in cattle on feed reports, and that loophole continues to show up as we thought it might here in the mid to late winter. It's probably even exceeded my expectation that given the, and inflationary environment and those type of things, that the consumer is still chasing beef.
Well, I think the consumer is still chasing beef here in this environment, and obviously summer grilling season is right on our doorstep here, not too far away. Also, too, I look at how cash is driving this cattle market. I mean, more record prices for in feedlot country this week. I mean, I'm hearing some dress sales over 300 in parts of Nebraska this week. I mean, that cash side feedlot country, that along with some of that maybe consumer demand still out there, really, I feel like that's been just driving this market forward and forward, Bryan.
I think your feel has been exactly right, and it's been just this amazing run. So this morning, I don't know about this afternoon yet, but this morning the choice cuts up 192 at over 300. Just clawed above 300, 300.40, selects up $1.44, 283.25, and that's a $17 spread. So that tells us that we're pretty current on the marketings too. So it's when those numbers start to come together that we start thinking a little differently. So it's kind of been a click on all cylinders market right now. If you're bullish, I'll go back to what I said in wheat. People do what they do when they're making money. Well, you've been buying cattle, you're making cattle. The traders will continue to buy until something pops up. And it could be a day like today where you have a reversal or there's some hint that, cash is going to be off $3 to $5 this week. Cash is firmer this week, and there's talk of even higher cattle next week.
A lot of things to keep our eyes on. You mentioned hogs and dairy. Any thoughts? I know hogs, we continue to struggle. And then any updates on the dairy market as well here, Bryan?
We're on the slippery slope with dairy. I'll start with dairy. So rallies, and we had some here recently, should be viewed defensively. We'll continue to encourage that. We have not seen any corner turned yet on milk production reports, cattle inventory reports, those type of things that would say that, hey, the dairy producer is beginning to turn the other way. So we can anticipate that'll happen, but we haven't seen it happen yet. Hog market still has me scratching my head why we're not picking up better retail demand and movement. And I don't know if it's the, stretch the rubber band till it snaps theory or what, but when I compare pork to beef or beef to poultry, some of these others ought to be getting a little more of their share of the demand market.
Yeah, you would think that would be the case. And I think it's going to be an interesting setup here as we move forward. Just if inflation continues to rear its head, et cetera, what does this economy look like? And what are people buying at the grocery store? I think that's going to be a big key here moving into the summer months, Bryan.
Yeah. Yeah.
It's
It's the grilling. I got to remind myself. You talk about the consumer. It's the grilling season. It's the retailer stocking up.
Yep.
People still spending money, pandemic money they saved. I think so. It seems like it.
Mhm.
Yeah.
It does. It does seem like it. Bryan, great thoughts as always. We always enjoy the time and appreciate the thoughts. Before we let you go, anything else you want to mention or reiterate for folks today?
I think we'll just, wish everybody a very safe spring. Things will get done. Don't overdo it. In my career, there have been um, several times where I've taken some kind of discouraging calls from people who've been injured or family members injured, and generally it's just working too many hours, too distracted, not paying enough attention, those type of things. And I know as I get a little bit older, you start reflecting a little bit more on safety, and things will get done. So have a safe, thoughtful, intentional process to get your work done.
Couldn't agree more. And I know if folks have market questions, they need some advice, they could talk with you and the team there at Total Farm Marketing very easily. How can they get a hold of you, Bryan?
That's another thing. People are really busy. If you want just a 2-second chat, just check on the markets, or, what do you think? You can give us a call, 800-334-9779. We'd love to take those calls and tell us, hey, I've got 2 minutes before I turn the corner in the field. What do you guys think about this? Or what can you help me with? Or what tools should I use? So give us a phone call, shoot me an email. You come late at night and go, like that Bryan guy said, Bryan with a Y at totalfarmmarketing.com. Shoot me an email, or just look at our website. We've got a lot of exciting things happening.
TotalFarmMarketing.com is that website. With that, Bryan Doherty, appreciate the time, sir. Have a great one, and we will talk to you next week.
Absolutely. Thank you, Jesse.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.